Hello, guys, welcome. Today I'm going to be talking about the exciting concept of tokenizing construction projects and building. If you've been following us from the part one and the part two, you must have understood exactly the concept of tokenization. But in construction, um, tokenization is essentially a process of turning physical real estate or construction assets into digital token that live on the blockchain. This tokens represent ownership, assets, or investment and can make processes like trading, investing, and tracking much easier, more transparent, and more secure. Uh, for an example, instead of needing to be a millionaire to own part of a skyscraper, tokenization allows you to buy a share of it in a form of a token, much like buying stocks of a company. So, the first step in tokenization is defining why you want to tokenize the project, which is you have to define the purpose of tokenization. There are many purposes for this. For instance, tokenization can be used to represent fractional ownership. Imagine you want to buy an apartment, but instead of buying the whole unit, you purchase just a fraction of it through tokens. Each token could represent a small percentage of the property. Another use is security tokenization, where tokens can represent financial stakes, loans, or investment. Um, this allow people to invest in construction projects without directly owning them. And furthermore, tokenization can be used to streamline project management by assigning tokens to specific milestones or resources. You can track progress and payments more effectively. For example, a token could be issued when a certain phase of construction is completed, such as the foundation work, signaling that a payment or next phase of investment is triggered. And also, we have digital verification. And the next step, which is the step two, is you have to choose the token standard. Once you've defined the purpose, you need to choose the right token standard. There are few types you might use, and the choice depends on how you plan to use the token. The most common standard is the ERC20, which is a fungible token, meaning every token is identical and can be exchanged for another. Think of this like a stock share. Every share of a company represents equal ownership in the company. ERC20 could would be ideal if you are tokenizing shares of a building or project. If you're tokenizing something unique like a specific unit in a building, you use ERC721 or ERC115. These are non-fungible tokens, which are NFT, meaning each token is unique. For example, an ERC721 token might represent ownership of a specific apartment in a building, and no other token would have the same value or property. Then, if you're dealing with security tokens, which are more regulated, you would use security token standards, which are the STOs. These tokens are designed to meet legal and regulatory requirements and are commonly used in real estate investment. And also, the next step is, which is the step three, is you have to create a smart contract. You know, this is actually a technical side when creating a smart contract. A smart contract is a set of rules and conditions encoded into the blockchain. It's like a digital agreement between all parties involved in the tokenization processes. For example, the smart contract will specify the number of tokens, their price, and how they'll be distributed. It will also define how tokens can be transferred, bought, or sold once the contract is created. No one changed the rules unless everyone involved agrees. This makes everything automated and trustworthy. In creating the smart contract survey, you have to develop smart contracts on a blockchain platform like Ethereum. And the key features of the contract will be the token name, the symbol, and the total supply. And ownership structure and how tokens will be distributed. If you're into cryptocurrency, this should have ring a bell somehow. A good example of a smart contract in action is when someone buys a token representing an apartment in a building. The contract could automatically update ownership details and initial the transfer of fund, all without the need for intermediaries like banks. So rules for token transfer and transaction include buying and selling. So step 4, which is to break down the construction project, is what we will look at now. So now that the smart contract is ready, we need to break down the construction project or building itself. This is where you decide how to divide the project into tokenized units. So you could tokenize physical spaces such as individual apartments, office floors, or even parking spaces. For instance, if you're developing a large apartment complex, you can issue tokens for each unit. Investors could then own a share of those tokens, just like owning the shares of a company. Alternatively, you could break down the project into phases. For example, you could tokenize different stages of construction, such as design, foundation work, structure, or finishing. Each token could represent the completion of a milestone, and this could help with managing the project, making it clear when a specific task is complete and ensuring payment is made at the right time. You could also tokenize things like machinery or materials. For example, a large crane or an expensive construction material could be tokenized and listed out to various construction projects, with token holders receiving a share of the income generated from its use. And then you could tokenize roles such as contractors, investors, and suppliers. And the step 5 that you need to do, remember, the step 1 is you have to define the purpose. Step 2, you have to choose the token standard. Step 3, you have to create a smart contract. Step 4, you have to break down the construction project. And step 5 will be to establish the legal and regulatory framework. Okay, so once you've broken everything down into tokenized units, it's time to consider legal side. This step ensures everything is above board and compliant with regulations. You know, real estate is heavily regulated in most countries. So the tokenization process needs to align with those laws. For example, when tokenizing property, you want to ensure that the token represents real ownership and that the transfer of token is legally binding. Additionally, depending on the jurisdiction, you may need to deal with security regulations if you're issuing tokens that represent investment. One crucial part is ensuring that the smart contract you created earlier is legally enforceable and doesn't violate any laws. You might work with legal experts or use platforms like Polymath that specialize in creating legally complaint security tokens. This is especially important if you're dealing with large-scale projects and multiple investors. And also, the step 6 is you have to issue the tokens. So now that everything is set up, it's time to issue the token. This is where the magic happens. You will issue the token to represent fractional ownership of the property, and stakeholders like investors, contractors, or buyers will receive their share. For instance, let's say you tokenize $1 million building project. You could issue 1 million tokens, each worth $1. Investors can buy those tokens and own a piece of the building without needing the full $1 million. So this step could also involve distributing tokens to contractors or stakeholders as part of the project progress payment. For example, contractors could receive token once they complete a phase of work which they can hold or trade. Yeah, and also the step 7 is facilitate ownership and transaction. So once the tokens are issued, you will need a platform to facilitate ownership and transaction. So this is where token holders can buy and sell and trade their tokens. Think of it like a stock exchange, but for real estate. You could use a decentralized exchange or peer-to-peer platform for this. The beauty of blockchain is that it allows for transparent, instantaneous, instantaneous transaction. So if an investor decides to sell their share of a property, they can simply list it on the exchange and another buyer can purchase it directly. The blockchain will track all transactions, ensuring that ownership records are accurate and tamper-proof. This level of transparency is one of the key advantages of tokenization, as it eliminates the need for intermediaries like brokers or notaries. So, tokenizing a construction project isn't just about ownership easier. It opens up new opportunities for investment. It improves transparency and makes tracking progress much more efficient. Each step from defining the purpose to facilitate the transaction plays a critical role in ensuring that tokenization benefits everyone involved, from investors to contractors to property managers. So we'll stop here and we will continue and we'll talk about the step 8 on our next